Hey everyone, welcome back to the channel where we break down the biggest moves in tech stocks with real data and straight talk. Today we're diving deep into Cerebras Systems, ticker CBRS, the AI chip specialist that's been making waves since its IPO, but just took a serious hit after its first earnings report. Let's get into it. Cerebras has positioned itself as a leader in high-performance AI infrastructure with its massive wafer-scale engine chips that aim to deliver faster training and inference than traditional GPU setups. The company went public amid huge AI demand, but recent results show both the promise and the growing pains of scaling this business. Founded in 2015 and headquartered in Sunnyvale, the firm builds specialized hardware for AI workloads, targeting hyperscalers and research labs. CEO Andrew Feldman has steered it from early development through its public debut, and with about 340 employees, the company remains relatively lean while competing in a capital-intensive space. Its core offering centers on systems that can handle enormous models more efficiently than clusters of smaller chips. Looking at the top line, revenue nearly doubled in the most recent quarter to around $193 million, driven by strong demand for its AI hardware and a growing mix of cloud and services deals with names like OpenAI and AWS. For the full fiscal year ending 2025, the company posted roughly $500 million in revenue, up significantly from prior years as AI build-outs accelerated. That growth is impressive on the surface, but the shift toward higher cloud exposure is expected to change the revenue mix going forward. On the earnings front, Cerebras beat estimates on both revenue and the bottom line for Q1 2026, yet the stock sold off sharply because guidance pointed to margin compression ahead. Gross margins came in near 39%, but the company flagged operating margins turning deeply negative in the near term as it ramps cloud services and invests heavily in capacity. Full-year projections now include ongoing losses, highlighting how quickly capital intensity can eat into profitability, even with surging demand. On the balance sheet, cash and equivalents stood at about $702 million at fiscal year-end 2025, supported by recent financing, while total assets reached $2.3 billion. Current ratio looks solid above 2, but debt levels and negative retained earnings reflect the heavy investment phase typical of hardware scale-ups. Operating cash flow turned negative again in the latest year, and free cash flow remains under pressure from large capital expenditures on manufacturing and infrastructure. Valuation multiples remain elevated, with trailing price to sales over 100 and forward PE estimates stretching well above 100 for the next couple of years before potentially compressing if growth holds. At current prices around $224, the market is still pricing in aggressive expansion, but the recent sell-off below the IPO level suggests investors are rethinking how fast profitability can materialize. Strengths include its differentiated wafer-scale architecture and early wins with major AI players that give it a technology edge. Weaknesses center on the capital-heavy model and margin volatility that come with scaling cloud services. Opportunities lie in continued AI infrastructure spending, while threats include intense competition from larger GPU vendors and the risk that cloud deals compress margins faster than hardware sales can offset. Over the past month, the shares have dropped more than 29%, with the 3-month decline exceeding 41% as post-earnings selling accelerated. The stock has now fallen below its IPO price, wiping out gains for early investors and reflecting broader concerns about execution in a high-growth but high-cost business. Relative to the semiconductor industry, recent performance has lagged as peers showed more resilience. All told, Cerebras delivered the revenue beat investors wanted, but the margin outlook and capital needs created real skepticism. For long-term holders, this is a story of whether its unique hardware can sustain premium pricing as the AI build-out matures. Thanks for watching. Hit subscribe for more deep dives like this, and I'll see you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, Join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.